Welcome to the channel. I'm James, and today we're looking at Meta Platforms Inc., otherwise known as Facebook, ticker symbol FB. They have just released their earnings for 2022 Q1, and the market is absolutely loving it, up 13.18% after hours to $198 a share, up from $174 just earlier today. So the market is absolutely in love with these earnings. We're going to be going through these numbers right now, then putting these numbers in our discounted free cash flow model and the Buffett-Graham intrinsic value models, two valuation methods for stocks, to see if Facebook is a buy in 2022. But before we get into the earnings, let's just have a look at what Facebook's been up to. From the year to the day, it's actually down 48%, which is massive. If we go to the year, it's down 43. It was at highs of around about 380 back in September and has gone on a massive slide. Previous earnings took a hit, but it looks like it is rebounding pretty strongly to $200 a share. If we just compare this to SPY, which is the S&P 500 index, over the last year, you can see that Facebook has obviously not beat the market. 43% down. Market is pretty flat, which is pretty shocking. And if we look over the last 6 months, you can see Facebook is down. So is this the time to buy? Well, that's the question I'm going to be hopefully answering for you guys today. So let's get into the numbers. We have Facebook's 3 months ended quarter in 2022 and the equivalent in 2021. Firstly, we want to look at revenue, but can you give a like on the video if you've enjoyed and subscribe if you're not already? I'll be bringing earnings releases and my valuations of these stocks when there are stocks, and that is pretty much every day. So please subscribe if you're not already. Anyway, let's get into the business. Revenue, it was 26.1 billion, and that is now up to just shy of 28 billion. So that is increasing. This is for the quarter, remember. We do have the yearly numbers here on Yahoo Finance. They don't have them totaled right now because Yahoo Finance is a little bit behind, but that's where I'm here to try and help you guys. So what has happened? Well, we're not looking at 2018. It's gone from 70 billion, 85 billion, 117 billion. And based on these updated numbers, if we add the quarters together with their most recent number, it is actually 119 billion. So revenue is up over 2021 and is growing. So that is what we like to see. Next, what we want to do is look at the net income, and then we go down here. How do we get net income? Revenue minus its expenses, minus everything else, interest, tax, etc. And the net income. Well, first, let's look at the total cost and expense. You can see cost and expenses are up 14.7 billion to 19.3. And where has this been mostly? Well, you can see a lot of it has been in R&D, probably with the metaverse. I imagine that costs quite a lot. Marketing and sales is up. In fact, everything is up, but R&D seems to be the main one. 14.7 to 19. And where does that hit us in the profit? Well, profit is actually down for the equivalent quarter, 9.4 billion in 2021, and is 7.4. So if we go back to Yahoo Finance, this is once again yearly. Profit 22, 18, 29, and 39 billion. And where is the profit currently? It's actually at about 37.3 billion. So down from 2021 because of the quarter numbers, adding in the most recent and the previous quarter, 2021 quarter is obviously down. So profit is down. Revenue is up, but profit is down. Next, we want to be looking at the shares outstanding. Are they buying back their shares? For example, why do you want them to buy back their shares? Well, if you have one share of a company and they're 10 shares, you own 10%, so you're entitled for 10% of their profits. If they buy back 5 of those shares, you still have your one share, you now own 20%. So you want companies to buy back their shares if the share price is low. And Facebook's share price is lower than it was at the minute. As you can see before, I said it's at about $200 a share, and earlier this year it was touching 400. So Facebook are buying back their shares at a good time, I would say, with this decline. What have the shares gone? 2.8 billion down to 2.7. So they are increasing the shareholders' value, which is good to see. Finally, we are looking at free cash flow. Now, Facebook does give us the free cash flow numbers, but we're going to be looking here. How do you get free cash flow? Cash from operating activities minus CapEx. And we can see that cash flow from operating activities is up 12.2 billion to 14. CapEx is up slightly, 4.3 billion to 5.4. I'm not going to do the maths. Facebook already did it for me. So let's just go here to free cash flow. There you go. 7.8 billion in 2021. And in the equivalent quarter, that is up 8.5 billion. So if we go back to Yahoo Finance and look at the cash flow, we can see they had 15 billion, 21 billion, 23 billion, and 39 billion, 39.1 to be exact. And based on these quarters that previously added, and then removing this one and adding in the 8.5, what does that give us? Well, it actually means that Facebook has increased their free cash flow to 39.6. So it is up from 2021, even just very slightly. So that is good to see. So what does that mean? Well, we're going to be looking at our models right now. So I've calculated the future free cash flows for Facebook. I actually need to update these numbers. I've been doing these so long. It's now 2021, 2022. Anyway, so calculate the future free cash flows. It's counting them to today's value with weighted average cost of capital based on the shares outstanding. And what does that give us as a value of Facebook? Well, let's have a look right now. It actually gives a fair value of the company at $237 a share and 44 cents, which means it's currently trading at a, well, not a 35% discount because the stock price is actually gone up to 197. So let me just update that there. 197. Oh, my sheet doesn't work. That's a shame. But anyway, $237. So it's obviously not a 35% discount, but about it's a $37 increase from where it is right now, which is excellent to see. Next, we want to look at the Buffer Graham intrinsic value models. This takes earnings per share and expected growth rate into account. What does this say about Facebook? I think this actually loves the stock a lot more. Yeah, $365 a share, which is a massive, massive increase. I mean, you probably want to take the averages of these two and see where it is. So if you said the stock was $280, $290 a share, I wouldn't be disagreeing with you. Now, let's just say we're going to not look at the Buffer Graham intrinsic value because it is very bullish on the stock. But one thing I'm noticing is that this is based on the averages. Now, you can see that the averages are decreasing. The revenue growth rate is slowing. And analysts think it's about 13% that it's going to go out. But let's just knock that down a bit. I'm not saying it's going to get to 1.5, but let's just say it goes down again to about 9% a year. Where does that put us at? Yeah, see, 222 is slowing a bit again. Net income margins, they have been relatively the same. They are quite good in that respect. But let's just say the revenue slows again. Where would it have to be for it to be sort of fairly valued? And that's 4% growth over the next few years. So really, I think Facebook is a buy based on these models. So yeah, let's just see what the market's still saying. Yep, it hasn't broke the 200 right now. Still $198 a share, but it looks like the market is really liking what Facebook has done in these earnings. So right, guys, thanks for watching. Please give a like on the video, subscribe if you're not already. Give a comment down below on your thoughts on Facebook. Do you think it's a buy? I mean, I have been saying this stock has been aware for a while, but I wasn't expecting the metaverse and everything to drop. So now these massive tech stocks are looking like a bit of a value play, which is absolutely crazy. You wouldn't have said that a while ago. Look at that graph. That is a sharp increase. Also, give a comment down below if you want me to do a video on PayPal, or is one video enough a night? Anyway, guys, thanks for watching as always. Please give a like on the video, and I'll catch you guys next time.